This morning, the global sell-off is getting more intense, with technology playing a major role. I would like to introduce Wedbush Securities Managing Director Dan Ives. We're examining the Nasdaq, which is currently down 856 points. Naturally, some of the major laggards are Nvidia and Apple. How do you feel about the sell-off, Dan? Right now, it's a falling knife. Would you like to take the knife? Get your Nvidia keychain quickly for less than $10. We are offering a huge discount exclusively to the first 100 orders. Indeed, as you can see, we are guiding investors through this difficult time by examining the winners and tech names. This AI revolution is what I think it will be. Look, investors are undoubtedly phoning today and throughout the weekend, asking, is this the end? Is the tech bull market coming to an end? It's not, in my opinion. I think this is merely a huge hysteria of terror that will open doors for companies like Amazon, Apple, Microsoft, and Nvidia. And for the past 24 years in the tech industry, that has been our strategy. Are you urging clients to buy on this when they call you this morning? We'll call it weakness, but it feels like more than that, boy. Oh, I see. In terms of deciding which levels and names you wish to possess, we have essentially been, I would say, table pounding. Because of where the growth is, I think they're going to see this more as an opportunity than as, catching a falling knife. You look at profits, you look at the numbers. I'm in Tokyo, and the demand for AI is present throughout Asia. Despite the global collapse and the Nikkei sell-off, that is not going anywhere. Today, we are communicating that to investors worldwide. Dan, I want to briefly put Apple on the screen because, in addition to the events of the previous day and the evident job number on Friday, one of the pressure factors was the announcement made over the weekend on Saturday that Warren Buffett had now formally cut his ownership of Apple in half. He remains the company's biggest shareholder. He has been attempting to raise money, and it is clear that he has sold out of other stocks as well, which I believe is contributing to the market's apprehension this morning. However, this stock is currently down 7%. Why do you think that sale occurred? You see, Buffett was making some sales in the first quarter. The 50% sale, on the other hand, was, I believe, eye-popping in comparison to expectations and attracted everyone's attention. Here, it will increase the pressure. It remains his most valuable possession. He is one of Cupertino's biggest fans. The top holding is nearly twice as much Buffett. And in our opinion, if you look at Apple's most recent quarter, the guidance, and what I believe to be 270 million iPhones in a window of opportunity for an upgrade, an AI-driven upgrade cycle ahead of us, that's a cause to hold Apple rather than sell it. Look, there's no question that people listen to Buffett when he speaks, and for good reason. Despite some of the anxiety here, now is not the time to sell Apple. This is a chance, in my opinion, especially as Apple enters what I consider to be a truly historic cycle of upgrades. Earlier, we had a somewhat macro conversation with Tom Lee about the direction of things and potential developments over the next month or two. I don't know whether never, but he had the feeling that it could be difficult to achieve true stability until October. Therefore, it's really difficult in August, and historically, September before you truly know if you have your sea legs or not come October, even if you believe the market will rise in the days that follow a decline. Yes, look, I believe Tom has some very wise things to say, especially in the run-up to the election. The next several months will be a seatbelt moment. The moment to own tech, however, is now if you consider the fundamentals, a soft landing, and a Fed-cutting environment. I understand that the bears, who have been hibernating for the past 18 months, have won during the past week or two. However, these are the names you own here if you look at quality tech, large-cap tech, and AI. What I consider to be a once-in-40-year cycle, and I believe that's the reason we're out here supporting each other during this awkward moment, rather than making a beeline for the elevators. And these, the profits we observed. Occasionally people pick faults, but overall, the Magnificent Seven did fairly well. Therefore, what we're witnessing right now is most likely just a few contractions or some air escaping from the excitement. What if there is a negative feedback loop and things do start to improve, and you receive both the earnings side of things as well as the multiple side? The Nasdaq is already down 10%. Where may that bottom be? A self-fulfilling prophecy, perhaps. I believe that the current concerns are unwarranted, not only based on earnings data, but also on my observations of demand for our checks in Asia for the remainder of the year and 2025. Look, it will be a ghost of a street that I believe will be fighting against what might be around the corner. However, if you examine the foundations here, they are robust for technology. Balance sheets are sound, and the amount of money spent on ad cycles once every 40 years. Look, this is going to have losers. Take a look at Intel. That was a disaster, of course, and a few others. But even if there are a lot of jitters going on in the world right now, you control the names of big cap tech, software, and semis when it comes to quality stuff, and you don't sell them. Members of our investment committee are taking action, or, if you prefer, exploiting yesterday's dislocation to create new positions or expand existing ones. Now joining us from New Edge is Rob Sin. It's interesting, Rob, because we've talked about not being Nvidia a lot over the past few months. Although you had several tech names, this was the one you didn't own. But you do now. Tell me why. Upon reviewing our portfolio, Scott, we discovered that it expressly compares against the Russell 1000 Growth. Additionally, the average stock in the Russell 1000 Growth was up 5% if you look back to the heights, while the index was up 21%. Our average stock was up 15%. The lack of Nvidia ownership was the cause of all that poor performance. Therefore, it calls into question how you're constructing portfolios that are meant to behave in specific ways within client accounts and ensuring that you're not taking on active risk, also known as tracking mistake. After a period of time spent underweighting the stock, we finally looked at our portfolio yesterday and discovered that a stock like O'Reilly, which is still a high-quality company, has produced attractive returns, and has many defensive qualities, was trading at a very high PE in relation to its history. Additionally, they noticed a slowdown in same-store sales. We therefore looked to that position in order to transition into a position similar to Nvidia, which is essentially improving quality, taking advantage of a recent value reset, lowering our tech underweight, and lowering our tracking error and active risk within our portfolio. Additionally, we thought that a half position made sense because they will be making money in the coming weeks. Keep in mind that we didn't take a complete position since we still believe that there is some short-term risk here, whether it is due to the unwind, this interest rate move, or additional jobs data that might frighten markets. We do believe that there may be a chance for you to purchase additional at reduced prices. However, the takeaway for investors is that volatility cannot be seen solely from a macro perspective. In order to do this, you will need to be tiny and surgical. And if this volatility continues, I foresee us making numerous adjustments to improve the quality of all 5 of the techniques that make up our portfolios. None of us are certain yet whether this is an undesirable growth scare or a welcome cooling. If the latter, we will have several opportunities. The important thing is to get clients ready to take action. I'd like to share with you another unusual activity we did. We were long duration a month ago. I've never witnessed a bond move like the one we've witnessed here. And since it's no longer as appealing, we've closed that out and are currently cutting the duration. According to Rick Reeder and all of the committee members, there is a lot to do. And if you're ready for it, volatility can lead to opportunity. Get your Nvidia keychain quickly for less than $10. We are offering a huge discount exclusively to the first 100 orders.